But look, we're going to really concentrate on this market route today here on the program and just try and explain first off by what triggered it. And it was actually this report right here. The US employment report was released Friday night, our time. So the US unemployment rate, it jumped to 4.3% from 4.1% previously. The number of unemployed people in America jumped by 352,000 people to 7.2 million. Now, this was way outside any of the estimates. It spooked the markets big time. Now, you can see tech stocks on the NASDAQ, they were most affected, down by 2.43%. So this is at the close on Friday. The S&P 500's the broader market there. It was down by 1.84%, but none of this was actually helped by the investment giant Berkshire Hathaway, led by the legendary Warren Buffett, reporting its results after the US markets closed, saying it's going to pivot out of some of its key tech holdings, and notably one of those was Apple. But it was picked up here today, not just by the ASX, but by markets right across the region. In fact, it was much, much worse in other parts. Japan collapsed, down way more than Australia. Have a look at this, down by 12.4%. So that really triggered big falls in other parts of the economy. It's the worst day in Japan since the massive share market crash in 1987. Korea's KOPSI, down, as you can see, by almost 9%. In Taiwan there, the market also collapsed, and so did many of the big semiconductor companies there, TMSC being the notable one there. Now, it was Taiwan's worst day, worst stock market performance on record. It will also hold a press conference very, very shortly once its session closes. In other words, what you can see across Asia, there is absolute carnage. Now, to get a glimpse of what's ahead, the eyes tonight will be watching the US Institute for Supply Management Services, the so-called PMI index, due to be released in the US at midnight our time tonight. Now, this will give a guide to see how the services side of America is holding up. So the litmus test is going to be the NASDAQ, this one here. Have a look at the futures market. So this is accelerated during the day. It was originally down a couple of percent after the 2.3% we showed you on Friday, now down by 5.3%. So in other words, the fall in US tech stocks is going to be significant tonight, and that then will actually reverberate again around the world. So it's a rough start there and gives a glimpse of what might lie ahead. So let's go to our markets today. And as I say, it was pretty bad out there. And the ASX 200 started the day, it was a fairly modest fall at the start. You can see there, down by around 100 points. But as really the momentum built up during the day when the Japanese and the Korean markets really started to hit the skids. So at the close here, it's a bit more modest than what it was in parts of Asia, but the ASX 200 down by 3.7%, 293 points. That wiped close on $100 billion off the value of our stock market today. There was almost nowhere to hide. So you have a look at this info on tech shares, down by 6.4%. The financials down 4.8%. The REITs, the real estate stocks, down by 4.3% as well. So you can see really it was a pretty tough day out there. Now, the AI hopeful is Appen. Have a look at its share price today, down 15.7%. So it really has had a big jump in recent times. Have a look at Block, which owns Afterpay, down 10.5%, give or take. A big fall there. WiseTech, one of the market darlings. An IT company, down 8.8%. Xero, down 5.6%. Have a look at Zip, the buy now, pay later company, down 10.7%. So these are big falls. Go to some of our bigger companies. The Commonwealth Bank, which is leading the market, down by more than 5%. $6.86, $125. People thought at $134 it was pretty expensive there. Let's go to Westpac, down more than 4.5%. ANZ shares mirrored that, down also around 4.5%, and the NAB off by 4.5%. So you can see the banking stocks were not immune by any of this. Now, then you go to, say, our big miners, and that's another place to have a look at. Less affected, it would be fair to say. They'd already had big falls, all of these stocks. BHP down 1.8%. Rio Tinto, fairly modest compared with most companies today, only off by about 1/3%. Fortescue off by 1.75%. So again, these are big falls. But I want you to show you something else, and this is a live price. Have a look at what has happened to Bitcoin today. So the price of Bitcoin, which at the start of the day was more than $60,000, is now $50,000. It's actually dipped below this $50,000 mark just before we were going to air. So it's down by 19% today. So that's what's happening to Bitcoin. Heaven knows if you translate it into Aussie dollars what's happened there, because the Aussie dollar's not doing so well. So look at that. The price of Bitcoin today has dropped by almost 12,000 US dollars and is now at $50,000. People got out of anything to do with risk. So we should also show you what's going to, or is likely to happen. We showed that NASDAQ index a little earlier, down by more than 5.5%. But the broader market, the S&P, it's going to go closer to where the Australian market is, so down by more than 3%. And the Dow futures of the top 30 companies in America down by 1.2%. So, look, this is a fairly significant event as to what's taken place around the world today, but particularly in Asia, and just what the knock-on effect. I should also mention to you that in China, the stock market fall has not been as great. And so that is one important aspect of it. But in some of the freer markets, Korea and Tokyo, you've seen big falls. Now, the European markets will be opening in about, 20 minutes time or so, 15 minutes time. And so you'll start to get a view as to whether this is going to become a global contagion or not. And that also is pretty important to try and understand that in terms of what reaction Australia will have in the next little while. One thing I can tell you is it's almost certain now that any thought of interest rate increases in Australia are gone. You could see that in the money markets today. You could see it in bond prices. So effectively what they're pricing into the United States right now as the money came out of the stock market, tried to find a safe haven, went to bonds, bond yields collapsed in America. It's basically saying there are now going to be fast and hard interest rate cuts in America off the back of all this. So it really is an important aspect to understand just how the markets will react to all this.